done since February earlier this year. But now the market's up over 5% in a very short space of time. It's probably only been a couple of weeks since that's happened. Where to now? I think the FOMC meeting's again this Thursday night. So what are you up to, Francesco?
Well, I don't think they're going to do anything.
No. Just have a couple of drinks and have a meeting and that'll be it.
It's quite amusing, go back 12 months or, even longer, anything that seemed to be slightly bad news and rock the markets downwards, but it appears that good news is good news and bad news is good news. So, look, I mean, the way I look at it is if they do embark on tapering, which I don't think will happen until next year, then the signs of the economy are stronger. But if they don't taper, it means they're not confident the economy's strong, which means the market shouldn't be doing what they're doing. But they never do what they should do sometimes. Look, I think, there's positive signs locally here. There's some companies going through their AGMs, and some of the AGMs are showing signs of some good results. And some are showing ordinary results. I mean, a company that had their update recently was ResMed, and things look good.
Day today.
Good margins, everything got sold off first,
but
which was surprising.
Had a great run beforehand.
Had a great run up, but there's a company that really I don't think should have been belted. And then you've got the banks just driving that market so strongly.
Exactly. YMYC 91 cent dividend,
and the result wasn't overly wonderful, I think it just beat expectations from our analysts. So the margins look good, but it was a solid result, but I wouldn't say it was outstanding to drive the share price there, but I think that dividend saw those those income hunters coming out of the woodwork again. So, but I expect, they're both, I think ANZ and NAB go ex-div on the same day next week. I think we'll see a bit of a sell-off there. So those that don't need franking credits, probably best to be a bit patient, and you'll probably see a little bit of weakness after the dividend season.
All right. What do you think, David? So with the big rally, people have been waiting for a pullback and they haven't got it. The market's kept going. If there's nothing going to happen over the next few months, we're going to get another 5%.
You can't see really bad news coming out. A few of the economic indicators leading indicators that I look for are showing signs. The activity jumped just for the Christmas period, and that's backing off now. Things like the shipping indexes have come off, and they've come off reasonably hard. So my view is it's not going. I think Janet Yellen will actually start pumping it a little bit more. She'll start putting a bit more cash in, get herself on Time magazine and have some fun. But generally, I can't see bad stuff. The targets I had for the XJO and the All Ordinaries were around this level, in fact a little bit below where we're trading at, and it just blew through that. Hasn't blown through it by a lot, but it's still strong. There's no reason to go out and get your bear suits on at the moment. Maybe a little bit of a dip, as Francesco says. Dividends get paid, they drop back. Telstra hit its target today, a medium-term target, so it probably has a bit of a pullback back down to $5. And then people get excited about it again. As I say, there's nothing else to do.
Stay excited for years.
There's a lot of cash. There's a lot of cash. There's a lot of cash still sitting there, and there's people feeling like they missed out on this rally, so they're trying to get in there. I had a meeting with a guy who who's a business development manager for a number of platforms, and he's saying we're still seeing a lot of cash in those systems that are sitting there, and they're trying to move them across.
And there's no speculators out there at the moment. There's a few CFD people joining in the game with CFDs, but margin loans, there's not the speculative activity you need at a top.
Real money.
It's real money.
That's right. All right, thanks for waiting on and being patient, John, from Mandurah. How can we help you, John?
Yeah, right. Look, I just want to talk to you about the banks and ANZ. I mean, the ANZ 91 cents next week, they're paying a dividend. I mean, that's probably that's quite outstanding, really, when you think about it. And the ANZ have been sort of on this. Mike Smith's been on this Asia thing for quite a long time. Are they seem to be getting the benefit out of that, or is it just they're in that space because no one else is in that space, you think? And long term, are they worth putting more dollars into?
Yeah, listen, thanks very much, John. Look, if you're a shareholder, I would stay there. Myself and my clients own ANZ. And look, there was mixed reactions about the result. There's not too many brokers that actually have a valuation on the stock where the current share price is. I think most of them are $1 below where it is at the moment. But if you're hanging around for those dividends, they're going to keep coming. I think it's a very, very steady business. If you were sitting in cash at the moment, if you were going to buy it and hold it for 13 months and pick up your 3 dividends, I suppose that's okay. But it makes it hard to chase the banks when they have gone so up to this at a level. I mean, except for holding them, do you buy more at this level, Francesco?
It depends if you're after the franking. I personally think that, and we've got quite a few buy orders ready for ANZ, but I'm sort of holding back, waiting for the ex-div date.
Yep.
I feel that there's probably going to be a bit more of a pullback than the 91 cents and the franking, mainly because in the last couple of years we've seen a lot of dividend chasing, so people will sell on the ex date. Some, and they've changed the rules now, so you can't buy the come dividend market. But I still think you'll see them sort of exit some of the bank, that bank, and then buy into another. So the switch might be back into CBA.
Yes.
Or some of the regional banks are looking quite attractive too at the moment.
Yes.
So I think we'll see a little bit of weakness there. But if you hold the ANZ, I think longer term, I think the strategy into Asia, I think, is a good one.
Yep. What have you got a favourite out of the 4? And do you go out of the top 4?
ANZ is my favourite for the growth side of things.
Yep.
CBA for defensive.
Right. Yeah.
And it's been that way for a number
CBA's
of
been
years.
expensive for 20 years.
And it keeps getting expensive.
It keeps staying expensive.
Keeps getting expensive.
Yeah.
But if you look at the detail of the results, I mean, the Asian business wasn't all that attractive compared to what the expectations were. But I think the long-term strategy will hold in play. And Mike Smith's the right guy for that too. He's got some really good networks in Asia. As far as NAB goes, they've gone down the UK path. I think that's been to their detriment in recent times. But we're seeing potentially the bottom of the UK market there, so there might be some pickup for them as well.
All right, excellent. Do you have a favourite in the space, David? And would you chase them after the rally?
That's the hard one. If you're reinvesting your dividends, you could go for some dividend reinvestment in the ones you've got, the ones that have that. Basically, the trend's up. $35.29 target on ANZ. If you are trying to hold as a shareholder there, John, just have your stop at $31.60. If it goes through that, then you'd start thinking about getting out. But otherwise, just hold on. Westpac, holding on well. CBA, getting close to my target of $78.27 that I set last June. And we're close. So I'm not that keen to buy it, but if you're a short-term trader, you may just buy it to get there. I don't know when people start switching into the dip for the dividends for CBA out of other ones, but generally the banks are holding this index up. The materials sector certainly isn't. It's sort of rotating around. So banks, I don't like NAB for a lot of reasons, and that probably personal, really. I think the worst bank in the world.
Had a bad experience once, did you?
Yeah, I don't like my money being
Dated
in India.
a Nabtella or
I don't
something?
like my money being, responsible and processed in India. I just don't like that gig. So, I think ANZ, CBA for a little bit, Westpac. ANZ and Westpac probably the better ones for me.
Well, the Westpac, I mean, we're going to Westpac, there's a potential there for a special divvy as well, which, again, the dividend chasers are looking for that sort of extra yield.
All right, guys, thanks for that. We're going to take a short break at the moment, but of course we'll be back to answer more of your questions in just a moment.
I could.
Welcome back to Your Money, Your Call, and we've got Stuart waiting on the line. How can we help you, Stuart? Good day, Stuart. We've got Mark on the line from Melbourne. Okay, we don't have the people on the line. We might just go back and talk to ResMed, which we were talking about during the break just then. ResMed came out with just missed their revenue targets slightly about a week ago, and the stock got sold off from $5.90. I think it hit a low of about $5.22. A lot of that sell-off does trade in the US as well, so a lot of that sell-off came in the US, and then we got really beaten up about 8% one day. At Kimber Capital, we've been buying the stock at these levels. We think it was oversold on that. They're launching new products. Overall, I think it's a pretty good story. And you were doing the same thing, Francesco?
Yeah, we've had it in our model portfolios for a little while now, and we just thought this is a good opportunity for those that sort of thought they missed a boat to get on board. I think it's an outstanding company. When they had their results out earlier this year, they had their 74th consecutive growth in revenue. So, try and find a company that does that. 74th consecutive quarter of growth in revenue.
Yeah.
Now, the 3%, it missed by 3%, but there was still growth in their revenue side of things. But their margins improved at the same time, which I think is very important. And also, they're looking at some new products, like you mentioned.
Yep.
So we're expecting sales to improve over the next couple of quarters also. We did a site visit out to their headquarters out there at Bella Vista recently, and a very impressive operation. I mean, I don't understand all the ins and outs about the machinery they had out there, but
it looks good and expensive.
Just some of the processes they
Did
had
they give you a hat?
Oh, yeah, you got to wear
you
all
got
the
to get your hat. Yeah.
We didn't get any photos. There's no photos, obviously. But just their operations were very impressive, and the way they run their shop out there, it was. And obviously having a manufacturing facility in Australia doesn't all go that well, but they have a similar facility in Singapore, so it's cheaper. But they will always maintain the manufacturing here because all their intellectual properties there out there at Bella Vista, and they can translate that into product very quickly, and then move that across overseas as well.
All right. David, what do you think of ResMed?
In terms of ResMed, I think that if it dipped down to $4.33 and $4.57, which I don't think it's going to in a hurry, but if it ever did, you want to buy it down there. At the moment, I think can see it up to $5.55, $5.66 area. I think it'll have a few problems up there, and people are getting bargains. There's a lot of volume coming in, but I just have the feeling it's got to spend a bit more time ranging, maybe the next month or so, just before it takes off again. So best thing would be a great shock down to $4.57 to buy some more.
All right. Okay, thanks for that, boys. Sorry, obviously we've got some callers having a bit of trouble getting through, but we've got Mark back. Hi, Mark. How can we help you?
Yeah, g'day. How are you, fellas?
Very well, thanks.
I'm just chasing a bit of how you think we're going to go on Sydney Airport. I got in and I'm going to write, which is one of the ones I am going to write. So
that's good. Hopefully got more going right than wrong.
So do you think it'll keep going, or is it time to take some profit?